All right, so let's get into some trend lines. Initially, I wasn't going to even post a video on trend lines, but I've had questions regarding trend lines, and I just want to go over it so you can have a nice idea on how to spot trend lines, how to use them, and so in the future you don't have to use them. You could pretty much see the charts. You can kind of see it without drawing it, so I think that's why I wasn't going to include trend lines or video on trend lines, is because over the years I just got so used to seeing trends automatically, or trend lines automatically. So excuse me. So trend lines are basically lines that measure out the trend, right? So as you look at a trend, look at something like this, that'll be a trend, right? So this is a trend. This is a downtrend. You see the high, a lower high, and then you see the low, a lower low, lower low. So we have a downtrend. It looks like downstairs. Now a trend line is just a line, or it's a support resistance line that measure out the actual trend, right? So it looks something like this. So this is a trend line. So if you draw out a trend line before, let's say before this happened, you drew the trend line out, most likely you can anticipate it coming back and hit that line. Once it crossed the line, the trend is pretty much broken. The only problem is when people use trend lines, they think once it crossed, the trend is going up, but the market has a way of tricking people out. Now, what trend lines are only useful when you use them with other confluences. So you want to understand different aspects of the market if you're going to use trend lines. For example, if this is a previous high right here, and this is also a previous high, and this shoots past the trend line and comes back down to create the low. So now this is a higher low than the previous low. So now we have a market structure shift, right? The only thing is, you have to understand, market structure plus trend line is going to give you a solid indication on what's going on, right? If you're just looking at the trend line and you're not focusing on the market structure, you'll get faked out, because it can easily come back down just like this. So this will end up being nothing more than an accumulation or consolidation for a continuation of the drop, right? So what I always advise when drawing out trend lines, what you want to do is you want to note where the previous high was before it started reversing. So if you can see the previous high and you note that, you want to wait for price to break that high. So price needs to break this high up here and reject off of it for this trend line to be valid. It needs to break the previous high and reject, even if it rejects something like this, but that high needs to be broken. This high needs to be broken for a confirmed shift change. If it was like this and it was never broken, price is still, phone ringing, my bad. Price is still able to come down and trick you out. So so you have to be very careful when it comes to trend lines. So you can mark out trend lines as much as you want. You can mark them out, and then I'll explain exactly what this means in terms of the actual order flow of the market, what to expect when you're looking at trend lines. But right now, since we're just in the first section of the course, I don't want to go ahead and confuse you. So if we go down, right, let's go down to the actual chart, and I'm going to show you exactly what I mean. So this is S&P 500. If we look at this, and this right here is the high, notice how this came all the way down like this. So if you drew this trend line after the second one, so you have to remember, it has to hit at least 2 times. If it hit 2 times, you can draw out the entire line, and it'll keep respecting. If that trend is going to keep dropping, it'll keep respecting that line, right? So now take a look at what happened. This is exactly what I meant when I drew this up here. If you look at this being the previous high, right? This is the previous high. The trend is going down. Trend line is broken. A lot of individuals will put the buy in because the trend line is broken, because they're seeing the trend line is broken, so they're thinking it's going to go up. Here's the problem. When the previous high was broken, right? When the previous high was broken, take a look at what happened. It went up and it started consolidating. Came down. Remember, market structure. In order for this to be a reversal, you have to think in terms of market structure. If we look at it like this, market structure, for a buy, we would need an indication. We would need a lower or a higher low to form down here. So this low right here can't be broken. So as this came down, whoever put their buy in up here pretty much put it in at a high point. You never want to put a buy at a high point. You want to wait for the retracement, the clear retracement, and we can go in detail exactly what to expect based on Fibonacci. You can kind of clearly see where to expect retracement to occur if it's going to go up. But if we're going to keep looking at this, and for us to have a clear indication that this is a buy, this would need to happen, right? A higher low would need to form. A higher low would need to form in order to confirm this being a buy. So this is how a lot of individuals get tricked out with trend lines. Once they cross the trend line, they think it's going to go up. But like I said, you have to wait for it to, once it breaks that high, you have to wait for it to break the high, the previous high. Once it breaks it, you need a retracement, and you need a fail to break the previous low. And now this gives you a nice solid reversal pattern. And as you look at it, it's an inverted head and shoulders, and it's also a sharp harmonic if it was to go up that direction. But take a look at what happened. It came and it took the bottom out. So it knew individuals, so it knew the market and institutions pretty much knew the individuals were going to think that this is going to go up, and they just pretty much took out all of the orders. Individuals probably, or other traders and retail traders, probably put their buys up here, put their stop losses down here. So now that's nothing but money sitting down here for the institutions. So as they put their buys going up here because they're thinking it's going up, you know, what's going to happen is their stop losses that they place down here are going to end up getting taken out as price come down. So all the money being grabbed right here, and then it continues doing what it does. So that's what when it comes to trend lines, you want to pay attention to that. You want to pay attention to that. You want to make sure you understand the previous structure needs to be broken. Like this is broken. This was broken, but then it also, as it's broken, another structure needs to be formed. So we can go through many examples of this, right? So now if you look at this, it's the same exact situation. You could draw a trend line. This is a trend line, just like this here, right? Same exact thing happened, right? Let me delete this. Don't want it too cluttered. Same exact thing happened here. And let's go down to a lower time frame so you can see it clear. Right? So now, the same exact thing happened here. When you take a look at this, tap, tap, let me draw these real quick. So it was tapped 3 times. So the trend was being respected, right? The trend line was being respected. It was hit 3 times. And then eventually it ran up. Trend line got broken. Now, this is the previous high. Remember I told you, it has to, once it has to cross the previous high. Once it comes down, it needs to create a previous, it needs to create a higher low. It needs to respect this trend line again. So it needs to respect it on the other side. So because then what that's gonna do is it'll create another trend line. That was not what I was looking for, but it'll create another trend line going the other direction. If it respected, what'll happen is something like this. Another trend. But if you take a look, this did not create another high or or a higher low. Instead of it creating a higher low, which it should have to show a reversal, it just tanked and took out the previous low. So now this, oh, that's an ugly line. But so like so like this being taken out is just showing that the trend going down is continuing. This right here was the manipulation for whatever orders were sitting up here, and it's just pretty much running down. And we're going to get into manipulation in the other section if you have not already gone there. But so now this trend shift is no longer valid, right? Because this was nothing but manipulation. So if we look at this, it's exactly what I was saying before, right? What you want to make sure to do is, if you're trading based on trend lines, like I said, I'm pretty much experienced to the point where I can see trend lines without drawing them, and I can see the structure of the market without pretty much drawing the lines. So, but you'll get to that point the more you backtest, and it's all about backtesting and being on the charts. The more you're on the charts, the more you learn. You can't just take a 5-year hiatus and come back and say, okay, I want to be a master. Can't do that. You need to be in the charts. Even if it's a demo account, it doesn't matter. You need to be in the charts. You need to understand how the market moves. So, like I was saying, it can work out for you if you understand what's going on with the dynamic, right? So now, boom, and this is how another trend is created. This is an accumulation where it starts consolidating to build orders, and then another trend is developed, and then a new trend line is set up. And it all will start from the previous or the new low being created, or new structure being created. So the new low being created, respected, and then the second respect. Once you see the second respect, this is, you could just draw the line. Once this respected twice, once price respects a trend line twice, then you can pretty much confirm that this line is valid. You could draw it out into the future, and most likely what's going to happen is it's going to keep on tapping it until it's ready. It crosses and it creates a lower high, and then it starts doing the same exact thing. That was not supposed to happen, but it starts doing the same exact thing that it did before. Now, guess what? All that means is that another trend for the downtrend has been created. So now, if you look at it, now you see how the market move. Right? So now it's pretty much clear how the market move, right? So what you have is, and I think I spoke about this in another section, what you have is this. You have this is so beautiful. But what you have is this, right? You have the trend. So the trend going down, downtrend. You have the manipulation at the bottom. And then you have the trend start reversing. So remember, that's I don't want to go ahead. But but those who are already in the group, who knows what I'm seeing, knows why I'm laughing. So you have a shark harmonic here, and then you have a inverted head and shoulders here, and then you have the manipulation, and you have the consolidation zone here. So this is price being accumulated, orders being accumulated for the reversal to start going up. And if you look at this, it's the, what is it? The market cycle. That's what it is. It's the market cycle. And this is all it does. It's all it does all the time. Every time. Right? But this is in terms of looking at it based on trend lines, right? So you can use trend lines if you know how to use them. But then you can add them with confluences. So this isn't a confluence for here is inverted head and shoulders. Then we have the shark. And we have the manipulation down here. And once the manipulation happened, we have a nice, we could draw the fib. And look at if the fib, it hit the 61, came down back to 0 point, right? Look at how right here could have been an entry on the 61.8, around 50 to 61.8, run up, and boom. And this on a higher time frame, which is based on another section, on a higher time frame, 34. Guess what this is? It's a doji. Let's move that to the back. It's a doji. So the bottom, the manipulation, that's the shadow of the candle, is when it came down. So as it came down like this, it came down. So this is it coming all the way down, right? So it came down, and then when it came back up. So remember, this is a body, right? So this entire thing, it started out, right? So now it came back up, boom, just like this. So as it came back up, it created a wick. And as the wick is created, now we have a doji. And now we have a reversal signal on a higher time frame. And this coming in is when price tries to reverse into the actual doji, or it's tried to get back into the doji and then go back up to create the candle to break the higher point of the doji, or to confirm the break of the higher point of the doji. So everything pretty much comes together as one. If we look at trading in terms of like a body, different aspects, we have different organs, different cells, we have all of them working together. And if we can put everything together, the system of the charts become clear. You want to try to break down the system. You want to try to break it down to the simplest form so you're not confused, right? So everyone, they're confused because they're only focusing on specific things versus focusing on those things in relation to other things. So they only focus on specific strategies. Like, so if someone is only trading trend lines, he don't understand. He won't see this inverted head and shoulders. He won't see this being a doji on a higher time frame. He won't see this, the reversal here is an entry point based on Fibonacci. He won't understand the market structure that's going on. All he sees is trend lines. So he's not clear as to what's going on, right? And he doesn't have clear take profit points. So now when you understand this as a whole in terms of market structure, trend lines, or, patterns, and you understand institutional order flow, harmonics, and you could put all of them together, what happened is you start seeing the market in a clear vision. It's clarity. So now you decode the market. You're no longer confused, and you understand the language of the charts. And that's the whole goal behind what's being taught, and behind this actual program. It's being fluent in the language of the charts. So this is the only way trend lines really work, is when you add them together in form of confluence. And I just wanted to make this video so you could pretty much see for yourself. You could see for yourself how to use trend lines. So boom, this is a pretty ugly trend line, but we can still use it, right? Something like that. So this is a previous high. Up here is a previous high, right? Notice how when it came down, it just kept going side. It kept moving sideways. And then notice how you could draw the trend line out like this. It stayed above the trend line as it reversed. So it created a higher low to go up. So now this became a valid trend line reversal, because it did not break the previous low. It created a higher low, even though this is like an ugly setup, but we can still use it. They're not all pretty. So boom, like this, it didn't break. It created a higher low, and it shot up. So now notice what took place, right? So now we're going to look at market structure. This is the high. This is the high. High was broken. So now we have another high right here. So now what we also have is a low created right here. Low is broken. So now you might think, oh, it's gonna tank, but this is the main low, right? So now that being the main low, if we look at this, oh my bad, I didn't mean to do that. But if we look at that as being the main low, that low was respected. This zone right here was respected. It never came down below this zone, so it was respected. So we're talking straight market structure. So boom, respected. Another high right here was created. Now the high was lower than the previous high, so you might think it's coming down, right? Which is a valid assumption. from what it's showing, and then boom. So now this low is respected. Now it didn't break this low at all. Now, if you can see what's going on, this is a pretty beautiful setup based on the institutional order flow, which is something that you'll get into in the future. If you have not already gotten into it. Right? So, because you have the order block right there. So, orders were put in to run it up. Right? And then, as it came down, this is another chance to get it at a discount price. The lowest price that you can possibly get in to run it back up to a previous high zone, where there are also orders that started to move down. So from an institutional order standpoint, it's a beautiful setup as well. But based on, trends, this became a trend of its own. So now it became a trend. Now this is, if a trend line doesn't look healthy, it won't last too long. Look at this. This is not a healthy trend line. If I drew a line across here, it's not healthy. So it's being pushed up too much, right? It's not coming down enough for relief to confirm that. Like, this is a healthy trend line. This right here is not healthy. You can look at it and you can't really draw a line. It's basically just going up in an unstructured format. But this is pure structure. It's beautiful. And then you see how it continued going down. So yeah, that's a brief explanation on how to use trend lines properly. So if you out there and you watching other people with their videos or whatever, and they're just like, oh, trend line, crossover, whatever, just understand trend line is best used with confluences, with other confirmation. You do not want to just solely trade trend lines, because you will get tricked out by the market. You will get tricked out. It's not always going to look perfect. And that's another thing. So you will get tricked out by the market, but you can use the trend lines to your advantage if you use them together with other tools. So you have the Fibonacci, you have harmonics, you have patterns like inverted head and shoulders or the regular head and shoulders. You have different kind of tools that you can use in order to merge or in order to mix with the trend line to make the analysis stronger. So that's a breakdown on trend lines. That's the breakdown on trend lines. So now I wanted to show an example of something. I want to show an example of something. I'm trying to see if I can find solid. But like I was saying, if you look at this, right, when I said anytime something looks like this, it's a doji on the higher time frame. Look at this, right? If we look at this, we're on the 1 hour time frame. If we go to the 4 hour, we go to the daily, and we have doji. See, we have the doji. If we go to the weekly, we have an engulfing, we have the doji, and we have the engulfing. So that's another thing you need to understand. Like the way price move, you have to understand the connections within each time frame. That's a totally different subject, but just that was just a heads up, right? So yeah, that's all. This video took longer than expected, but it's much needed. If you have questions about trend lines or you want to trade with trend lines, this will help you a lot. So let's get it, y'all. Big fish.